Welcome to the TRBusiness YouTube channel. I'm delighted to be joined by Dag Rasmussen. Dag is the chairman and CEO of Lagardere Travel Retail. Dag, it's a perfect time to catch up.
Thank you. Good morning, Luke.
Dag, let's just reflect on year to date, how the business is positioned. H2, revenue growth 97.2% like for like, a strong performance for Lagardere Travel Retail. How are you looking going into this final quarter?
Well, 97% was H1, so it was doubling the activity. That was obviously great. The summer has been very good, like touching 2019. We really feel great confidence, people wanting to travel. And during the crisis, we continued to invest, so it gives us a good setup for further growth. As you know, we had this partnership in Dubai with HWH and created Lagardere HWH, which becomes the leading food operator in the Middle East. We also created this JV with AWPL in the Pacific, creating the leader travel essentials in the Pacific. We grew in Americas, in Peru, in duty free, opened a new entity there, which is very successful, and food service in Chile, and also opened 3 new countries in Africa, Gambia, Tanzania, Mauritania. So we really continued growth trajectory. Even during the crisis, we continued to invest during COVID, which I think was a very good idea given what we see now. And we continued our developments with JD.com, which we partnered with in China, which helps us a lot in our multi-channel approach and makes us more astute digitally, which is very important both for China but later on for the rest of the business as well. We continued winning tenders. Medina is I guess the latest example, and very, very importantly, we renewed our contract in Paris. So I think everything is in place to have a great fourth quarter and probably a great 2023 as well. Obviously, there are some risks, geopolitical risks, inflation, sanitary. I don't think too much, maybe depending on the policy in China, but I think the fundamentals are here for a great 2023, but with a lot of uncertainty, and we have to work with this uncertainty and be very agile and flexible.
And explain a little bit more, Dag, about how the business is positioned to deal with these imponderables. I mean, macroeconomic uncertainty, raging inflation, interest rates, supply chain bottlenecks. Are you seeing some of that pressure ease compared to last year, or does it continue to be very volatile, given the situation with traffic delays and flight disruptions over the summer we saw at major airports? What's the situation right now, particularly for the airport business?
Well, in terms of disruption, I think things have improved. I mean, it was so difficult to get staff, and when we got staff, we had to retrain them. And that was true for us as a retailer, but also for the airports as operators. So this, I think, has improved. Supply chain is still a big issue. I mean, there's issues such as glass. Some companies don't manage to find the right level of glass, or transport, energy prices, and so on. So supply chain is really under pressure. It's improving slowly, but it's still not perfect. Inflation is very strong, and this will probably go on for a while, fueled by electricity, but not only. So this is something we really have to mitigate. We mitigate it by studying prices at all levels of competition, be it local markets or other airports, other channels, including e-commerce, to be able to position ourselves, depending on the markets, with a real value proposition. And much more frequently than before, we adjust our prices to remain credible and to remain relevant to our customers. But when we see the success we have in 2022 with all these issues, logistics, congestion, and so on. I mean, it can only make us positive for 2023 because we've been out of stock. I mean, the rates on inventory has been really, really low. And despite that, we managed to do excellent sales. So, yeah, this makes me confident. I mean, we do the right things to have it improve. And even when it was bad, we had great results.
And how is the pressure on free currencies affecting your pricing strategy across the business lines? I mean, duty free, travel essentials, fashion and food service, obviously with the exception of, I would say, US travellers that are benefiting at the moment from the strong value of the US dollar. Wallets are being squeezed internationally. How do you approach that in terms of your pricing?
Well, first, for the US, it's true only for international travelers. And the big market in the US is domestic. So the point with inflation is true everywhere, although it's a bit weaker in the US because they control their energy better than others. So how we handle that, as I said, we try to adapt the pricing as good as we can to remain relevant to all our customers. In duty-free, value is part of the promise. It's not the only one. We also have to improve on experience, improve on everything we offer to the customer. And when the experience is wow, he's more ready to spend. So it's about value more than pricing, and that's something we work on. More generally, the fact that we're on 3 business lines allow us to cope with all kinds of passengers. Travel Essentials offers more competitive prices than food or duty-free, so it really has the capacity to draw more traffic. And within these stores, we create bundles to make products globally more affordable. We have promotions going on in order to make the business more attractive. So, and it works. I mean, people are willing to spend when they have the right products, with the right staff to serve them, with the knowledgeable staff. So when you have the store, the assortment, the staff with the digital support for it, things are good. So we continue this way.
In Asia Pacific, we are seeing some more positive indications now. You know, the Koreans, Taiwanese, the Japanese appear to be coming back internationally.
Yes.
But obviously, the big question mark remains over China. And when that resurgence will come, would it be premature to expect a big upswing in spending, particularly on the luxury side, when that does occur?
Well, the when should be with a if. I don't know if and when Chinese international travel will come back. Well, they will come back, but how fast is difficult to say. So I'm not overly optimistic for 2023. But, you know, we kind of hedge this by having a significant presence in China domestic. So we are strong in domestic airports in China and in Hainan. So the Chinese will continue to spend, and there are enough of them to spend both locally, Chinese domestic airports or Hainan, or internationally. And our objective is to be able to catch them, quote unquote, to give them the best service, the best products, and have them continue to be one of the best shoppers in the world. So yeah, I'm confident they will come back somehow, but where and when is, I would say, difficult to tell.
Let's talk a little bit more about China. Obviously, you touched on it before, but JD.com Alliance, and we had the JIC investment, the joint venture minority acquisition of travel retail, Lagardere Travel Retail North Asia last year. Since then, we've had CNSC come into the mix there.
Yes.
Is that, I guess, trio partnership, that joint venture, is that now bearing fruit as you would have expected it to?
It is bearing fruits, but in such a disastrous market that you cannot really feel or pick the fruits. But yes, I mean, we are continuing to grow and set the basis for the future. The fact that we are with JD.com really helps us in all the multi-channel approach. It has also helped us to grow in Haiku Airport, where we got a master concession. So now it's a very positive trend. But as I said, I mean, this year China is really, really bad for us.
Let's talk.
But it was the star last year. This year it's the US. I mean, it's the good part of having a balanced portfolio among geographies, among business lines, among channels. So, yeah.
Let's talk now about the Middle East, where
Yes.
you have a strong presence, and you mentioned in your initial response about the Medina
Yes.
airport concession. Congratulations on that, where you
Thank
became the duty-free and travel retail master concessionaire. You are now the only operator in the region with a presence across 4 countries, I believe. How important, as a share of the total business now, is Saudi Arabia moving forward? They're very ambitious in line with Vision 2030. How do you see the next few years planning out aligned with that growth in Saudi Arabia? And what, I guess, for you is the ultimate ambition in the region?
Well, Saudi Arabia is growing just, I mean, it's exceptional. The growth rate we've seen is fantastic. We have a great team there. We've been able to contribute to introduction of tobacco and duty-free on arrivals and all this. So the landscape is really evolving with a very dynamic population. You see the fruits of the Saudization, which has been difficult for us as a company, but which also really brings positive momentum in the country. So it's a really fast-growing country. We have future developments which we hope will be official soon. And obviously we continue to try to grow in our main airports like Jeddah, Riyadh and Dhabi, which where we have been operating for several years, and we hope to be able to continue to grow there. So no, it's an important part of the business, a growing part. And you know, travel retail is a worldwide business, so growth can be everywhere, and we try to capture it anywhere and everywhere. And I mean, we've had budget presentations with our countries. Every country is set to grow.
It's turning into a bit of a perennial question now, but Abu Dhabi, beautiful terminal building. The latest update we had official update was during Medfa, where the line from ADAC was that they would be sharing information with their partner sooner rather than later. It's now, I believe, 7 years or so since the award, maybe a bit more. It doesn't seem any closer to beginning. What are you hearing? Where are we with that?
Well, most has been built. I mean, so there is an airport. We have built most of the stores, so it should happen. What I hear now is second half of 23. Will it be beginning or end? I mean, I guess it's probably towards the end of second half. That's the guess today. I don't think there has been any set date for opening, but from what we see and what we feel, it is getting closer. It's true that it's frustrating. I mean, we were supposed to open on 7th of July 2017, but they have had their headwinds, and it's part of things which happen. It's bad, but we cope with it. And we set up a team there in Abu Dhabi, and also a distribution center in Dubai, in order to anticipate the opening of Abu Dhabi, which maybe was a bit blunt, but it helped us in Saudi Arabia. We wouldn't have had the same success in Saudi Arabia hadn't we created this distribution center. But obviously it's underutilized for the time being.
Right, okay. Let's just touch on some other priority regions moving into next year where you casting your eye. I mean, Africa is an obvious example. Perhaps start with Africa and the potential there.
Well, Africa for me has a great potential. It's the way we are there is very good. We started with Dakar. investing very heavily is maybe a bit too strong, but with great stores, not having any compromise on the quality of the store, of the quality of the furniture, of the quality of the assortment. And it's a store, well, several stores. We have a Relay, we have a duty-free store, and we also have a very specific artisan craft store. And I've met some Senegalese who have high positions in France, and they said, "I just love your store. It's a place where I really buy because I find unique things from Senegal there." Because and that we do in every part of Africa and of the world, we have teams who look after the local products, which is good both because it makes our stores more appealing, and it helps the local communities. So that's something we insist on. So based on this very good example, this has helped us grow in Gabon, in neighboring countries, in Mauritania, Tanzania, Gambia, hopefully soon in other countries, which I hope we'll be able to announce soon. So we continue our business development there based on a great example. Obviously, if there are tenders in South Africa, we will look at it as well.
On the subject of tenders, there are some interesting opportunities coming up. I'm going to put you on the spot here.
Yeah.
We had the Spanish airports duty-free tenders, or tender coming up for the contracts. We receive further information now on what that looks like, although the official release of that is yet to come. Will Lagardere Travel Retail bid based on what you've seen?
Based on what we've seen, yes. So what we've said is that we would answer depending on how the tender is set. So in some conditions we would not go. If it's only financial, if it's one lump for all airports, then we wouldn't go, because then it's for the incumbent. That's obvious. If it is something more flexible with more opportunities, then yes, we would go.
Okay, well, we'll be keeping an eye on that when the official release comes.
Yes.
Dag, just a final question then, just more broadly, what does 2023 look like for Lagardere Travel Retail's business, not only for your customers, but critically your consumers?
So the consumers are keen to travel. We feel that there's really an energy, which we feel here at the TFWA as well. So people want to travel. So what we need is to really go to what they want. So more ethical, more environmental friendly, more authenticity. So they are keen to travel, they would be keen to shop if they have the right assortment, if they have the right feeling about what we offer. And that's something we're obviously working on ourselves and also with our brand partners.
And, sorry, continue.
And regarding our clients, airports, they're really all very positive, or most very, very positive in terms of traffic. So we think the tailwinds are there. There is this risk/opportunity on the climate change. You know that all our industry is heavily looked after because of the image of air travel. So everything we can do regarding environment, regarding more responsible products, regarding decreasing consumption of energy or switching to greener energy is something which is very, very important for us, for our clients, and at the end of the day for our consumers.
I have to ask you on the final question on the eco-conscious Alia store that you introduced in Geneva.
Yes.
And this year, at the time, we were told there would be more.
Yeah.
Any steer on potentially on a country basis or even a region basis where you think they could be?
I don't have any information as to where the next one would be, but I must say that we're very happy with what we've done there, which is in terms of carbon emission, 40% reduction in terms of furniture and the global building of the store. So it is the right way to go. It's only one brick, because what we want is really to have a more sustainable supply, so supply chain, but also the products. And we've started that in Geneva, but it's something we really want to continue on. We created this care label to promote or make more visible the more responsible products. More responsible being those who make more efforts for the environment or are more local or more ethical. So it's a label which we've created to show to the customers, because one thing which we can do regarding the planet is to communicate, because in our stores we have the most influential people on the planet who come. We have the best consumers, influential consumers, so we should use our stores to better communicate on the environment. This is tough because being in airports, we're not always credible. So we might be accused, we and the airport, of greenwashing, but I mean, it's so important that we have to do it.
Mm-hmm. Yeah, really strong call to action. To end, thank you very much, Dag Rasmussen at Lagardere Travel Retail, for speaking to us today.
Thank you very much.
Thank you.
Have a good day.
Thank you.